Hey, good evening, everybody. We will get started here in a couple of minutes. Just checking in, make sure you can hear me loud and clear. How's everybody? Mic test, mic test. Hey there, Jim. Where are you located, Jim? Oh, you're in Texas. Yep, me too. I'm in Austin, Texas here. Nice and hot, right? Where are you? We're about in Texas? Magnolia? Yeah, I know exactly where that is. I grew up in Houston, Texas, so that's pretty close. All righty. Audio's rocking. Good to hear. Well, we've got a good group here, so I appreciate everybody being here tonight. Give it another minute. We've got a lot of people still flocking into the room. So if everybody here is an option trader or has traded options, put in a 1. And if you're new to options, put in a 2, if you don't mind. Kind of get an idea of the audience. Nice. And if you like trading options more than just the underlying outrights, like just trading stock or futures, if you like options better, put in a number 1. I should have probably made a different number. Well, good. We've got a lot of option people here. That's great. Okay, well, let's get started. Well, again, welcome. And tonight we're going to talk about really 2 amazing option strategies, the butterfly and the long condor. So let's get going. So a little, brief background on myself. I've been actively trading options now for over 30 years. I think, wow, that's a long time. But I started, it seems like it's yesterday, I started my trading career back on the oil side, trading oil cargoes and, trading products and stuff. And then went on to one of the largest oil trading companies in the world, Transworld Oil, and ran their trading group for 10 years out of Bermuda. So it was ran the international trading desk there in Bermuda. And we were, again, it was Mark Rich, Fibro, and Transworld were the 3 largest oil trading companies. So it was a lot of activity. We did a lot of stuff on the oil side, but we also really expanded out to all the other commodity sectors and futures and foreign exchange. And then, so it was a really broad group of company as far as what we were doing. But oil was our main thing, but we still did a lot of other things as well. But then started trading options back in 1987 on crude oil. So I really got fascinated by options, and that's been kind of my passion ever since. So directional trading, timing, and then using options for risk management and better leverage. So let's get started and talk about it. So the following webinar is purely for educational purposes. Any stocks, options, futures, or ETFs mentioned does not constitute advice and should not be construed as a recommendation. So everybody should be able to hear okay, right? I had a couple people say they can't hear. Everybody else hearing okay? Okay, let me just type in a note, say they probably need to go out and come back in. All right. Okay, so what we're going to be looking at here is the secrets to trading profits. And it really comes down to me, in my opinion, to options and then really good solid risk management. So, trading is a business of probabilities, and to be a successful trader or investor, controlling your risk is what really wins the game. So knowing and better understanding then how to manage and control your risk is going to make a dramatic and positive difference in your trading or investing performance. And one of the best ways to do this is through the use of options in your trading. Okay, so for swing trading or even longer term investing, there's no really better way to trade or invest for unmatched and greater returns and with a lot less risk than through the use of options. Now, option trading also has many more advantages than just trading stock. But as everybody here probably knows, it's a bit more complicated as well. But once you understand the benefits and the advantages of options and option spreads, you're really going to never look back. So when used correctly, option spreads are going to provide you more defined trading risk for your trades. It's going to lower your capital at risk, going to give you greater trading leverage, and options and option spreads are an unmatched hedging advantage. Now, what if you had a trading strategy that could turn around losing trades and maybe even turn them into winners? And what if that same strategy could capitalize on the two main option pricing components, time decay and volatility, more so than any other method? So would this be worth your time to learn it? Now, again, over my 30 plus years of trading options, I found that the most valuable go-to option strategies that can really literally help any trader out there more than any other are these two strategies, the butterfly and the long condor option spreads. So they've got some really unique characteristics that really make them amazing. So the huge advantage of these strategies are their unique option framework that allows you to construct trades that will provide more consistent and greater returns in any type of trade environment, and especially when you get into more high volatility or uncertain kind of market environment due to their kind of dynamic structure. So we're going to go through a lot of examples here tonight of the various different butterflies and how they're used so you can see the advantages of these option strategies. Now, because they are structured to require only a small amount of your hard-earned capital, your trading returns are going to be greater and your trading stress is going to be very low. And that's always a major win-win. So the longer you're into the trading game, it's going to be more controlling your risk, keeping your at-risk smaller and kind of chipping away, and then eventually you hit those big ones. But you want to stay in the game and you want to control your risk, and you also want to help this to do your stress to reduce your trading stress. So these are great for that. Now the butterflies and long condors are dynamic and they can be traded for a variety of different reasons with different goals in mind. So in other words, you can learn how to trade butterflies and long condors, and you're going to be covered for both your offense and defense of your trading. So profits and hedging, so goals and protection. Now they can work no matter what the markets are doing. You could be in an uptrend, downtrend, or sideways market. They can provide you income from stocks that are going nowhere. They eliminate the stress of having to be perfect on a stock's direction or overall market direction. They'll eliminate the time decay expense that you encounter from decay and long options, and that's a real obsession with me, is also, not only keeping my risk low, but also keeping my time decay or theta low. They'll help you to really take the unsettling guesswork out of your tradings because you don't have to be so perfect on your directional, aspect of your trade or timing as much so. And these can be structured for very low cost, very low capital at risk. And you can get returns of 10 to 1 or higher. So you'll see a couple examples here later of that. Now, the butterflies and long condors, they're also very flexible, as you're going to see tonight. And once you learn the fundamental setup, you can then adapt these option strategies for both your goals and your market insights. So they can be structured for more of a delta neutral, where you don't have to be so exact on your price direction. But to me, the real beauty is that they can be directional, offering you either a bullish or bearish exposure to the market when you feel pretty sure a stock is headed one way or the other. But if you're wrong about it, the butterfly and long condor is going to really help you to manage that risk and keep it low. And if you're wrong, it's going to be low, but you can still keep in the trade potentially and have that potential for a large potential return. And that's always a win-win situation too. But let's be real, these option spreads are not going to give you that unlimited profit potential, such as if you just go out and buy calls, but they're usually going to cost you a lot less than buying outrights. And they really do offer you an amazing risk reward trade setup. So when we go through some examples, the butterfly, there's no other option strategy, period, that can give you the return on your capital at risk as high as a butterfly. So you'll see that's what really makes it amazing. And the Long Condor can also offer some high returns, not quite as big as the butterfly, but still good. So this also that means the butterflies and condors significantly can increase the probability of winning trades while also reducing your risk. And that's what it's all about. To me, it's all direction, timing, and then risk. Now the butterflies and long condors, they can be used for hedging when you mess things up. And that's going to happen every now and then on your trades. So they can be used as a fast, low cost way to cover your you know what when your position starts to move against you. And there's no other strategy I've found, period, that matches what you can do using these two strategies for hedging. All right, and we'll go through some examples on that as well. Okay, now by constructing a butterfly or long condor around a strike that is under pressure from another core trade. So let's say maybe you had a credit spread set up or a debit spread and it starts to go against you and you're worried about it. So if you can construct a butterfly or condor around it for hedging, it becomes a really great way to immediately neutralize, lower your risk, and control that risk. So you can do this really quick. Now, what happens is you can keep the original position open by just implementing either the butterfly or long condor hedge on that original position. So this hedging strategy, what it does for you to benefit as a hedge, it takes advantage of time decay because part of the strategy, you've got a long part and a short part of the strategy, okay? So you're mixing vertical spreads. And the short vertical spread is going to help you on that time decay component. So while you're waiting out the trade maybe to stabilize and then move back to where you want it to, it's a great way to stay in the trade without putting too much equity against you. And then a lot of times all you need it to do is stabilize, have a little bit extra time, have it stabilize, and it moves back in your favor. At that point, there are a lot of things you can do. You can remove all your hedge, stick with the original trade, and then write it out for what it's worth. So there's so many times in the market, you'll start getting some pressure from a, news story or something like that, that'll kind of take the momentum out of your trade. And then you're left, having a situation where you either have to stop yourself out or stick with it, potentially losing a lot of money. But if you can hedge it, you can really reduce that risk and still have the opportunity to make some big profits. Now here's the basis of a butterfly. So it's a very simplistic, actually, when you break it down. It's combining vertical spreads. So in this example, this was a vertical call debit spread. So you're long a call here and short a call here. So in this example, the capital at risk is $300, the debit paid, okay? So it's still a pretty decent, risk reward trade. You've got a defined risk trade here. But in my opinion, you never want to ever lose your total capital at risk. So even if you've got $300 up here at risk, it'd be better to do something that you could do to hedge it out so you don't lose that 300. So one simple, real quick way we could neutralize the risk, reduce the risk, would be to convert this to a butterfly. And to do that, all we have to do is sell a vertical call credit spread against it. So we sell a call credit spread, sharing that same short strike. And so this example, you bring in $200 credit, all right, from selling the call here, buying a call here, and you just created a balanced butterfly. So from doing this, you went from a $300 at-risk debit, bringing in that $200 credit. Now you've got $100 of risk, and you still have a potential profit zone here that you don't really maybe have to do anything. And if it goes out in your zone, you can make a pretty decent profit. And if it goes out at expiration up towards the top of what we call the profit tent, you can make a huge return on your small amount of capital at risk. So that's the beauty of the butterfly. So we can go in and out. We can go into it from a debit spread or a credit spread, or we can set it up just as the butterfly. And we control our risk from the width of the butterfly. So we'll go through a lot of examples here in a minute to show you. Now, the thing I like about the long condor, it's similar to the butterfly, but what it does is it widens out your short strike of your vertical spread that you're putting against the long spread. So you can use calls or puts for butterflies and condors either way, but what this does, it spreads out that profit zone. So here it'd be long, say a call, short a call, and instead of having the butterfly where you're short the call at the same short strike as your debit spread, you're going to try to widen out that short strike and sell it further out of the money and that's going to give you a bigger profit zone to work with. So you don't have to be as perfect for kind of threading that needle for the max profit. So it's one of my favorites to, when I'm hedging, this is the first thing I do is I go usually convert to Long Condor. And then if it still looks like the market still is unstable, could close out the short credit spread here and adjust it and sell it and create the butterfly there. So it's a really great way to hedge as well. And we'll go through a bunch of examples here in a few minutes. Yeah, question is, this work with small accounts? Absolutely, because you'll see here in a minute, I'll show you one example where the amount of capital that you put up on the butterfly was $10. So that would be perfect for a small account, right? So these are great for small accounts because the capital you put up for butterflies and long condors are very, very low. Now let's take a look at the core concept that really make the butterfly and long condor truly amazing. So the most important option factor for profit generation when using the butterfly and long condor strategy really comes down to understanding option pricing. Okay, so option pricing and the concept of time decay or theta and its effect on the price of your option. So let's take a review of this core concept. Now, when we look at theta, what theta does, it tells us how much an option price will go down over time. So that's the rate of time decay of your stock's option. And time decay occurs because that extrinsic value or the time value of your option goes down as expiration draws near, and at expiration it's zero. So it's a wasting asset. Now, when we look at the butterfly and long condor, they both take advantage of time decay because if you just look at this structure, you're going to have a vertical debit spread side and a credit spread side. So the credit spread side, you're selling options and you're selling volatility, and that gives you that benefit of time decay. Now here's an example of the simplicity of the butterfly. So here's XYZ companies trading at $45, and we're looking for just a move down to 43, a directional move. Okay, so butterflies and condors are great for directional trades if you have the right situation where you have a good directional target. So I always use Fibonacci levels and moving averages for targets. Okay, so in this example, XYZ is trading at 45, and we're looking for a move down to 43. So we want to do a really low risk trade though to keep it defined, and I'll show you how this works. So bought one option contract of the September 44 put. We're looking for a downside move, so we're going to use puts, and that had to pay $2.38. So remember, one option contract's equivalent to 100 shares, so that'd be like $238. Now then the other part of the trade is then we're going to sell the September 43 put. We'll bring in $1.67 there. So if you break that down, that's a call, a put debit spread, and then we're going to sell another 43 put, bring in another $1.67, and then below that buy the 42 put at $1.06. So when you put those three legs together, that created a butterfly, and you're short the body. That's how it gets its name. So you're short the 43 puts twice. So that's the body of the butterfly, and that's where it gets its name. The body of the butterfly, and then the wings are the long legs. So it's called a long butterfly. This would be called a long put butterfly. And it's balanced because the strikes, it's the balance, the strikes are equal between each strike, the dollar amount. So $1 between the 44, 43, and the 42. All right, so that's a really key. Now, if you look at the math here, you'll see that your debit cost was $2.38 plus $1.06, less your credit cost. You get $1.67 twice times 100 to convert it to an option. So the risk on this trade example is only $10 per spread. So if you did one spread, the cost of the trade and your risk would be $10. So if you have a tiny small account, that's pretty manageable. You do 10 of those, it's $100 risk. But look at the potential profit on this, okay? So to take the profit to figure that out, you just take the middle strike and lower strike less your debit cost, which was $10 times 100. So in this example, if XYZ closed exactly at $43 at expiration, this trade would make 43 minus 42 less your cost of the trade, 10 cents, would make 90 cents times 100 to make it into an option contract. So on one contract or one spread of the butterfly, you'd make $90, your risk is 10, that's a 900% return. Now that's always called that theoretical because you'll never get it exact with the butterfly, but still if you made if you made 100%, 200, 300, that's fantastic. So that's the beauty of the dynamic beauty of the butterfly. It's just, there's nothing that even comes close to giving you these types of return on your capital. So here's another example. This is SPY. ETFs are great. Index options are great. So here's SPY. So this is going long a call, long call butterfly. So long the 203 call, costing $3.10. Okay, so your debit cost there $310. Short the 205 call, bringing in $1.70, and you're going to do that twice. Okay, so you're bringing in a total of $340 credit, and then you're long the 207 call at 70 cents, $70. So if you go through the math here, you can see your total cost is that 310 plus the 70, and then you get the $340 here. So in this example, your total capital out or risk is your debit paid of $40. Now this is a $2 wide spread, so $200 wide, okay, spread width minus our cost, which is the total risk. That gives you your potential theoretical profit, which would be $160. So if you were to nail it and pin it right at 205, right at expiration, you'd make $160 on the risk of 40, 400% return. But what if you made a $40 on the trade? That's 100% return. What if you made 80? So these are fantastic ways to trade and keep your real risk really super low, but still provide you potential big payoff. So it makes it great for any kind of market environment, but especially when you have an uncertainty in the market where you're not quite sure, you really want to tighten up on your risk. One second here. Oops. So let's take a look at how do you make a decision, or how do you choose the best butterfly or long condor strategy for your particular trading goals. Now, one major goal of every trader, in my opinion, should be to select trades that are based on what is going to provide you the most consistent positive return that gives a return based on very low defined risk and not always the greatest return. So the longer you're into the trading game or business, or doing it full time or part time, you're going to kind of come to the conclusion that you want to keep your risk as low as possible and just kind of chip, hit singles, doubles, and occasionally you're going to hit the big one. But if you can manage your trades that way, you're going to stay in it. You're going to do much better. Your equity curve is going to be nice and smooth. You're not going to have a lot of big, aggravation, drawdowns, and stress. And one of the best ways then to accomplish this is to be able to be aware of the different option strategies that are out there and available to you, understand how they each work, and then select the one that's going to be best suited for the market environment you're trading and your specific trading goals and your capital that you have to trade. So, Alan might only have a capital account of $5,000, and Frank might have 100,000. So it's going to make a huge difference there. But one thing that's in common when you do the butterfly or long condor is you can do it with a very small account or a huge account. So when I set up an over-the-counter options brokerage group for the largest oil brokerage company in the world, PVM Oil, and we did an option butterfly for this big hedge fund, and it was a 25,000 contract oil butterfly. So point is, you can do huge amounts of volume, or you can do one contract that might cost you $10. But it's a very dynamic trade strategy that anybody can use once you understand how it works. Now, when we look at the butterfly, I kind of call this the butterfly family. There are a lot of different variations of a butterfly, and you can use long call or put butterflies, so you can use calls or puts. We have what we call the broken wing, or sometimes referred to the skip strike butterfly. You can use calls or puts. We have what I kind of refer to as the ninja butterfly, which is an unbalanced ratio butterfly. We have the wide wing directional butterfly, an iron butterfly, and then hedging, which is something you've got to know how to do. And that's a defensive strategy using the butterfly and condor. So if you're not able to hedge a position, you're what I call my members at accident waiting, or trading accident waiting to happen. And then we have the other one, the long condor. So let's take a look and go through a bunch of these different trade examples to give you an idea and a feel how they work. So first we'll go and look at the butterfly. Now, when we look at a butterfly spread, we can adjust and control the risk and the profit based on what we call the wingspan. Okay, so let's take a look what that means. So here's an example of a directional long butterfly on SPY, the ETF. Now this is going to be a narrow wing butterfly spread, so it's going to be very, very little or low capital at risk. All right, so this spread width here is going to be $100. All right, so it's SPY, and SPY at the time of this trade setup was trading at $267. So it's trading right where my pointer is, right here. It was going through this right into that 50% retracement level of the Fibonacci, and we were targeting from this high to low. I used Fibonacci levels right here to about 273, 274. And also there was a lot of option activity, unusual activity. So what I love to see is a specific Fibonacci level, or it could be a moving average level that also has a lot of option activity, can give you a really good target to use for your trade. So you want to establish a target and then set up the trade and have it set to that target. All right, so we did a butterfly, and the butterfly then was set to target our price target where we thought it could go, 273. So we bought, at that time it was traded at 267. We bought the 272 call, sold the 273 call, sold the 273, bought the 274. Okay, so if you look at that, call debit spread with a vertical bear call credit spread creates a butterfly. Now this is a narrow wing butterfly because the cost, look at this, the cost down here on this trade, one spread was 10 cents. That's the maximum risk, so that'd be $10. Now the spread width is $1 wide, so 273, 2, 4, so it's $1 between everything. I'm using the Thinkorswim platform here, so dollar wide spread, so $100 less the cost of the trade. The debit cost 10. That's as much as you could lose if you did no other adjustments. So the difference is your potential theoretical profit. Again, you'll never get that exact, but you can get pretty close. So you can see this could offer you up a 900% return. And the thing that I love about it, not just the 900%, but it's on $10 per spread. So that's a narrow wing butterfly, so very low risk. But in this example, 2 days later, this was up to $70 per spread, 700% return. You say somebody told you they made a 700% return, you'd think that they're lying, but $70 on your risk of 10, 700%, okay? So a lot of things that you can do with the butterfly, not only for profit, but also when you do these for hedging. So that's an example there. So here's the risk profile, all right? So, excuse me, the purple is what it's doing in time, and the teal on right here is what it does at expiration. So if you look at where it was going out here, this was on the 16th. 2 days later, it was trading right there. So, pretty close to max profit, but it's still that black area there is still what's left of time decay and volatility in this trade, which doesn't get totally stripped out to the last second of expiration. So you can see this went from 10 cents or $10 per spread to $80 per spread, and that's your profit of $70 on the risk of 10, 700% return. So, in this example, 4 contracts, $280, max risk if you did 4 contracts is your $40, right? So small account can definitely handle that. Now here is a long on Tesla. So the other great thing with butterflies, you can trade the big expensive stocks for very little capital. So here's an example, Tesla, and this is doing a wide wing butterfly. So this one, the one you just saw, was a spread width of $100. This is a spread width of 1,000, but you're gonna have a bigger profit zone, but still low at risk. All right, so again, Tesla was traded at 933.50. Right here, we were looking for an upside move, and we were just targeting kind of an even number, $1,000. So we wanted to see, okay, how can we structure a trade? Tesla is really expensive, to buy the options, even to buy the shares. I mean, if you were to buy 100 shares of Tesla here, that cost you $93,350. And even if you bought the outright calls, they're going to still be, $1,000 or $2,000 or more. But if you do a butterfly, you're going to see how cheap these things can be, and you get the return is unbelievable. All right, so it was trading at 933.50, and we were targeting $1,000. So this was set up on the 8th, and this was just a few days later, expiration on the 12th. All right, so bought here the $900 call, sold the $1,000 call. That's the target. Sold the 1,000 again, bought the 1,010. So spread is $10 between. So that's 1,000 per spread. Look at the cost here, 32 cents, $32. That's the maximum risk. If you did one option butterfly spread here on Tesla, your maximum risk would be $32 without any adjustment if everything went wrong. But look what your potential profit could be if it went out at $1,000 just 4 days later. Theoretically, you could make on one spread $968, over 3,000% return, 30 to 1. All right, there's nothing else, any kind of trading strategy that can do that. So just think about that. You know, here you have a butterfly. If you nailed it perfectly, which when you do these, I usually never think you're going to nail it perfectly, but what if it goes out in your zone in here? The return on that risk is going to be still huge. Hard to borrow. You don't have to borrow. These are two vertical spreads. You've got a debit spread and a credit spread. There's no borrowing on a butterfly. Now you can leg into it as well. You could do the debit spread side first and then add the credit spread, or the other way around. But there's no borrowing for this trade at all. There's no margin. This is a debit cost trade. Okay. Okay, so let's look at the risk profile of this. So this is what's amazing about it. So here, if you bought 100 shares, right, and you paid $93,350, and then on the 10th, it was trading at 1,008. So you can see here, that's a lot of money, and you've got a huge amount of risk. But if you did the butterfly, you're controlling an option or an underlying security that would cost you $93,000, but you're controlling it with the butterfly for $32. That's pretty mind-boggling. All right, so here's the risk profile of where it was going out right here on the 10th, okay? So you can see how flat, that's the purple magenta line is what the profit is in time. So this takes in consideration time decay. So you can see here, there's huge amount of potential profit here that's not gonna be taken out because it's going out right here. But look what happens. So this is going out right here at $1,008. So that's still on this trade, $138 is where the spread went. It went from 32 cents to $1.38 or 138, and that's $106 per spread profit. If you did one spread, $106. If you did 10, that's $1,060. That's still, look at the return, 331% return on your risk of 32, with the potential here to have made even a bigger return. So it's really perfect, ideal for small accounts. Now here's another one. This is on GLD. So this was, we had a nice trade set up. This was on a gold trade. And GLD is a great ETF for butterflies. So this was doing a wide wing butterfly, directional butterfly with GLD based on gold. All right, so it's a spread width of $500. So I have an alert service too that gives out, you know, sends out these trades. So all these trades you were seeing, these were, most of them were alert trades that we send out by text. So in this trade example, this was in July, we had set this up right here. It was trading right there on the 8th of July, right about $170. And it was just chipping away. You can see how it chip. But we were looking for potential for it to move to 175 based on this Fibonacci extension and option activity. So what I set up a really low risk trade to do that. So we did a really wide body butterfly, $5 wide or $500 wide, and pretty much nailed it. All right, so went long the 170 call and went short the 175, our target. Sold the 175 again, bought the 180. So $5 between each strike. Okay, so balance, and look at the cost of this. $89 was the total risk. So $89 or 89 cents per spread, $89. Now your risk is the spread difference, $5, $500 less your cost, 89. So with all these butterflies, we can also do adjustments, but if you did not do any adjustment and it went either straight down or straight up through your wings, you would lose $89. But if you nailed it perfectly to just kind of to look at your risk reward, that would be a profit of $411 per spread. That's a 462% return on that risk of 89. So you're risking $1, theoretically make $4.62. Now on the 22nd though, it was going out, it was right here. And so when you know, the way I teach my clients and members, when you hit your target, you start taking profit. Because everybody here's probably had a trade where it hits your target and you stay with it, thinking it's going to go maybe expire there, you make max profit, but then the next day it's either down or goes through your profit zone, so you miss it, right? So always take your profit when it hits the target or start scaling out. So on the 22nd, it hit 174.55 right there. At that point in time, it was up from, excuse me, 89 cents. It was at 2.99, so that was at $299. So there's your profit per spread of $210 or a 236% return. So a really great way, easy way, low risk way to trade a directional trade to the upside. In this example on gold using the GLD ETF. Now here's a really interesting example. This is on Amazon. So this is another example to show you how you can trade a really high expensive stock for very little money by using a wide wing butterfly. So here's a wide wing with $1,000 spread. All right, so Amazon was trading down here into the support area. This blue line was a 200 period moving average, and it had been just churning down here. So we were targeting a trade. We were thinking, okay, it could potentially, we think it could go up here to this 1830 level, which was kind of a fib level. And so we were thinking, okay, you know, how can we trade this maybe to get just to move towards 1830 and not cost a lot of money? So a butterfly. Now here's the amazing thing here. So if you were to buy 100 shares of Amazon looking for a move up, you would, and it was trading at 1,782, you would have to put up $178,200 for 100 shares. Now, if you look at what it did here, so it went to 1830, the target. So you would have made $48 per share on your risk of $178,200. You made a return of 2.69%. But is that worth it to have that much dollar exposure? To me, it's not. And also the return isn't that huge, really. But look at the difference if you had done this trade as a butterfly. All right, so here's the butterfly trade setup. Target 1830, so bought the 1820 call, sold the 1830, sold it again. Wide wing butterfly, $10 wide, $1,000, cost 80 cents. Debit, that's the max risk. Look at the potential profit. If you nailed it perfectly at 1830 at expiration, make $920, that's over 1,000% return. Now that's, you know, pretty small, right? 11.5 to 1. Now, even if you make anything inside of that profit zone, it's still going to be a fantastic return. Plus, you're trading a stock that would cost you over $178,000, and you're controlling that stock for a directional trade for only $80 per spread. And here's the other big, huge advantage, okay? Not only are you controlling something for little money and also low risk, but the advantage of the time decay and volatility collapse going into expiration has a huge impact on this option strategy. So here's an example of how that works. So on the day of expiration, this was on the 6th, and this was on the AM. So this was about 9:30, 10 o'clock in the morning. At that point in time, the trade had hit, it was trading right here at 1836. So it had gone over the 1830 strike. So this was right there at 1836. It was trading at, it went from 80 cents debit to $2.30. So it was up $150 per spread. All right, that's still a great return, right? 150, that's a 187% return on $80 of risk. That's at 9:30, 10 o'clock in the morning. Look what happened 3-4 hours later as we're getting into the last hour of the day. So it went from in the same day from 9 on the 6th, September 6th, in the AM, it was up 150. Now here it is towards the end of the day, and now it's up $614 per spread. And on your risk of 80, that's a 769% return. So this increased your profit by 4 times and that return on your capital by 4 times. And that's because of the dynamics of that, having that short spread here. So you're short that call credit spread side, and that's just sucking out everything going into the close on any theta that's left or volatility that's left. So in a pricing of an option, time goes to 0 at expiration and volatility go to 0, and that's the beautiful advantage of the butterfly as well. So many different things. So it went from 80 cents here to $6.95, and there's your $615 per spread profit. So one spread, $615, 10 spreads over 6,000. Yeah, so you could call that a pin move to the target. Now here's another interesting way to do butterflies. This is what we call the Batman butterfly. This was on Microsoft. So this is also what we call a pinning trade. So with monthly option expiration, like next week is monthly option expiration. So a lot of times the big institutions will get in there and try to manipulate prices up or down to what we call, where it will go out and actually expire. So we call that pinning at a specific strike. So we were looking at 2 potential places where Microsoft could pin, and this was for last month in June. And so, but we didn't know, if it'd be up or down. So it was so cheap we could do 2 butterflies, which I call the Batman butterfly. So this was last month, and so it was trading. Microsoft was trading here at 187. All right, so it's trading right here, and we were looking at the option activity. There's a lot of option activity at the 200 strike for monthly expiration at the 180, and it was right in the middle of the range, and we didn't really have a good sense, would it be up or would it be down? So when we looked at the butterflies, it looked like we could do a butterfly targeting 200 using calls, and we could do a butterfly targeting 180 using puts, and it was still super cheap, but still potential high return. So here's what it looks like, and that's why we call it a Batman. So this was doing a butterfly targeting 180 and a butterfly targeting 200. So we bought a put butterfly, the 180, 2.5, 180, 187.5, $2.5 wide spread. Look at the cost, $15 per spread. That's the max risk. The potential max profit would be $235 per spread. And then we also added the long call butterfly, 197.5, 200, our target, 202.5 at $17 per spread. Max profit $233 there. Now you put the 2 together, the maximum risk is a total of $32 for both these butterflies. Max potential profit, there is a $2.5 wide spread, less your cost of your trade. So theoretically, if it goes out at the call butterfly at 200, or if it went out at the put butterfly at 180, theoretically you'd make $218 on the risk of 32, 681% return, still huge. Now, at expiration, it was traded at 198.95, so not perfect, but very close. So went out with a profit of $63 per spread on the risk of 32. So that's a return of 197%. Okay, so went out right here. So another way to play an upside or downside, you're not totally sure, but you think there's going to be either down or up, and you want to control your risk, perfect way to do it. So here's 17 cents debit on the call butterfly, 15 cents here. Call butterfly was trading up at 94 cents. The debit, the put butterfly dropped down a penny. Now here's an example of a long condor spread. So these are really great. I love these for kind of hedging into, or they're also low risk when you get into it, and also can get your theta down to a positive theta decay. So it's basically you can use calls or puts. So you could have a call debit spread here and a bear call credit spread here, or you could do put debit spread with a bull put credit spread. So in this example, I'm going to show you a fantastic way to defend a trade. And actually in this example, you'll see this trade was defended. Not only was the risk reduced, but it was reduced to 0. So the first trade, it started out as a put debit spread for a short trade to the downside. So it's trading right here about 276, and we're looking for a move down to this fib level of 270. So we were targeting there. So what had been happening a lot and what continues to happen, if you have a short trade, it might hit your target, and then you're thinking you're going to stay with it, that it could go lower, and then it snaps back up. So you end up losing on the trade. So what we typically will do is if we do a put debit spread or something, we'll target and take part of our profit there. And then if it hits there, we'll also convert part of it to either a long condor or a butterfly. So the first part of the trade was just a 273, 270 put debit spread, very low defined risk at $65, good potential returns, $3 wide spread, $300 minus 65, $235 possible profit, really nice return. But what had been happening, you get down there, snaps back, you miss your opportunity. So when it hit down and was trading at that 271 area, took profit on part of it here, $98 per spread on that debit spread, nice return, 150. But rather than staying in the trade, doing nothing else, or closing it all out, converted the balance to a put condor. So how did we do that? We sold the 268 put, bought the 265 put. When it had flushed down, it was trading down around 270. So we were able to pull in a credit on this bull put credit spread of $65. That then offset the debit cost. So now we had a free trade. All right, so here's the trade set up after that additional leg was put on it. So the original trade was to put debit spread here for $65 cost. And then when it flushed down to 270 area, sold a bull put credit spread here, brought in $65 credit on that, offsets the debit cost, free trade, zero risk. Now we can sit back and see what happens. If it was to go out between the two short strikes, we would make a total of $300 on zero risk. It was going out right here at around 271, which was still a really great profit of $164 per spread on zero risk. So if you look at analyze the two trades together, then here's what you ended up with. You had trade one made $98 per spread, 150% return. Trade two made 164, so double that almost on zero risk. So many different things you can do just once you understand the ins and outs of the vertical spreads. Now, if you'd like to learn a lot more about how to master these high reward, low risk option strategies that can work in any type of market environment, there are two things that you guys and gals can do tonight. First off, hopefully there's enough here that I've showed you and shared with you that you could start doing these tomorrow. But if you'd like to learn a lot more about options, just options in general, and a lot more about these strategies, I've got a fantastic offer for everybody here tonight. All right, so I'm gonna give you a combination of, this is what I call my quick start options trading program. So I'm gonna be doing an options masters trading workshop live, which will also be recorded, not this Saturday, but next Saturday, the 22nd. I do this once a year, so I'm going to do it at the 22nd. It'll be like a 5+ hour course, recorded, broken down in modules of the recording. This is yours forever. So this is a live part if you want to attend, or you don't have to. So it'll be 11 a.m. Eastern to 2, the first part, and then we'll finish up on Monday, the 24th, from 6 to 8. Now, not only will you get this live options masters workshop, and then I'll show you what all is going to be in this, but I'm going to also give you my butterfly and long condor option masters course that I did back in June, so not too far back. And this is on demand recorded. So you're going to get all this, both of these courses. And if you sign up here tonight, $197, and plus some other great bonuses. So if you'd like to join us for this and really get in depth into options, and these will be your courses for life. Once you buy a course from me, there's no time limit, it's yours forever. So you'll have a really massive library of these, everything you need to know on options. So I'll go through the courses with you to show you. So just click on that link, powercycletrading.com/master expo. And if you click on that, you should be able to, it'll pull up that drop down. And so this is just good for you guys and gals here tonight. This is a really special offer for the expo people here, which are really good friends. So Master Expo. So you get the 5-hour option masters trading workshop, plus the live recorded, plus the recorded 6+ hour butterfly condor course, plus all the bonuses that I'm gonna show you. No promo code needed, PayPal or credit card. So just put in that link there click on it or copy and paste it. So let's go through everything you'll get here in this course. So I call it the Options Masters Quick Start program because you're going to get everything about options. So not only the butterfly long condor, but we're going to go into more detail on options in general, plus some other strategies in the workshop. So these would be my favorite types of option strategies, period, that we'll cover in the Options Masters course, plus the butterfly long condor are two of my favorites. Plus, you're going to get, that's the Quick Start program, because if you're more new to options, I just finished a new course on options for beginners. So this is another place that you can start. So even if anybody's here starting out with options or you're more advanced, it doesn't matter, you're going to be covered. So you'll also get this new on-demand options beginners course that I just completed. We'll do a follow-up live Q&A after the Options Masters course. You'll get a link to that. That'll also be recorded. You'll also get my option trading tutorial, just another option course on pricing and delta and the Greeks. You'll get my option strategy guide, 15 different option strategies for your library. My Greek power tool printout guide. So this, tells you what the Greeks are. You can just put it on your desktop. And as an additional bonus, you're going to get a 30-day trial membership to my Power Cycle Trading Club. So you'll have access to our weekly Q&As, access to my daily virtual trading room each and every day, my video newsletters every night, and much more. So if you'd like to join us for all this, it's only $197 for everybody here. So use that link. I'll put it in there one more time. And then I've got one more package. A lot of people love the alert service that I do. So if you'd like that package, here's the link to that, and I'll show you what you get here. So this is for if you've really been looking for more help and guidance in your trade. This is a special package for you. So the purpose of this alert service is that a lot of people here can't be full-time at their desk, sitting there watching every trade every day. And the other purpose of the trade is that a big part or hard part of trading is finding really good selective trades. So in this alert service, I do it for you. So there are 4 different alert services you'll get, and you'll get all 4 of my alert services for this one price. Plus, you're going to get everything in that package 1, all those bonus courses, live course, and also the alert services for 13 months. So not a year, but 13 months. And that also gives you 13 months to my trading club, which gives you access to my virtual trading room for 13 months, my Q&As, all that stuff. So if you like this, and we'll go through the details here. So you'll get my top breakout reversal trade setups. These are typically usually the debit spreads. You'll get my butterfly long condor setups, my calendar diagonal setups, and earnings setups. So if you'd like to join us for that, let me give you that link. And it's $1,000, but it's for 13 months. Plus you get all these goodies that I'll show you. And there's a to-pay if you'd like. So use this link here. It's powercycletrading.com/expo plus. All right, so 13-month trading alert services, all 4 of my services. It also includes package 1, all those courses and bonuses. So all that, and then you get access to the alert services for 13 months, typically 5 to 20 stocks and ETFs or more every month. Breakout alerts, butterflies, condors, selective calendar diagonals, selective earnings. So every time I send out an alert, you'll get a trade guide for each one, price entry point, exit points. If there's an adjustment or profit take, I'll send that out by text. You can have it by text or email. And so then there's a setup review video of the trade after it's put on. All the trades are listed and archived. And then for 13 months, you get access to my trading club, which gives you our weekly Q&As every Tuesday, which are live and recorded for 13 months. My video newsletter every night after the market closes for 13 months. My virtual trading room for 13 months, and discounts on everything I have on my website, all my courses and software at 60% off for 13 months. All right, so let's take a look. This is just a summary of our results. So I started the breakout service first back in 2018, and here it is through today's date. We've had 122 trades closed, 87 winning trades, 4 break-evens, 29 loss. So really nice high winning percentage, 76%. These are all usually virtual debit spreads, so keeping the risk super low on these. And then the other one that I started was the butterfly condor alerts. So this is through today's date, we've had 39 closed trades, 26 wins, 3 break-evens, 10 loss, 74% winning percentage. Now these are very, very low risk, anywhere from You saw some of those examples, $30, $50, $80 per spread. So very low, but very high reward, right? 2 to 1, 3 to 1, even higher. And then you're going to also get my calendar and calendar diagonal alert service. This one is just killing it. We've got 89% winning percentage on these. We've been doing a lot of these lately, and these are really awesome trades, but really high winning percentages the way we're doing those. We've had 36 close, 31 wins, 1 break even, 4 losses. And then our earnings alert service, we've had really nice results. 39 total, 32 wins, 1 break even, 6 loss, 85% there. So with the Options Masters Workshop, let's go through that and take questions. This will be Saturday the 22nd live, plus it's recorded if you can't make it. This is I do it once a year. So this is really going to get more detailed into the option Greeks, how to use them for your trading edge. So the advantages, how to use Delta, Theta, Gamma, Vega, and then how option pricing works. And it's used for selecting the best option strategies, going into the market maker secret, which is kind of standard deviation, how to take advantage of that, how to use standard deviation for probability trade analysis and your price forecasting, how to use option delta and delta for probabilities, how, why, and when to take advantage of volatility and volatility skew. What is that? How to use it to your advantage. Option strategy guide. So this is a option strategy guide to give you guidelines for which option strategy to use based on market conditions. What are the best option selling strategies to use? What they are, how to use them. What are the best buying strategies? And then option butterflies and the amazing trade advantages that you get from the butterfly, selling time, selling volatility, and hedging. All right, so this is all live and coming up. So but this is going to be broken down with a number of different strategies, not just specific to butterfly, condor, and then plus you're going to get the on-demand course, butterfly, condor, which is even just a total master's course on just those 2 strategies alone. So then what are the major trading advantages of using the long option condor? Why do you use that? Combining debit spreads and credit spreads that can give you 100 to 200, 300% returns with very low capital at risk as well. And then how, why, and when would you use the long option condor in your trading? Then the other one that we really focus in on, and this is one that's going to be covered in quite a bit in detail in the upcoming live course, will be the calendar diagonal spreads. So these are medium to longer term directional trades based on timing and income, option strategy for also direction, how the calendar diagonal spread works to create market neutral and directional defined risk trades for your income or potential big profits from market direction. So how does the strategy actually work to do that? So actually capturing time decay without totally sacrificing directional speculation. So it's a combination of a credit spread, but with a diagonal component to it to give you that bigger potential profit. So it benefits from the difference in implied volatility between your short and long option series. So in this kind of strategy, we're selling time and volatility as well. So how, why, and when to use that strategy. And then my favorite go-to option strategies we'll cover in detail in the live course. Buying options, when to do that, vertical debit spreads, calls and puts, butterflies, long condors, and then calendar diagonals, and a lot more. So you'll learn the trade management, how to mix and match vertical spreads together for your hedging adjustments, how, why, and when to use it to hedge, and then you'll learn assignment risk, expiration risk, auto exercise, how to avoid assignment risk. That'll be a chapter in the course as well. Now, not only will you get the live course, but you're going to be totally saturated and just with a trading library for everything about options. All right, so options are my kind of passion. I've been, like I said, 30 years of it. So lots to pass on to you in these courses, but they're yours forever. So you're also going to get my on-demand options butterfly condor course. So step-by-step recorded course broken down in 30-minute modules or less. You get the PowerPoints of these courses. They're very, very detailed. And so, you'll go through the option Greeks that are vital for the butterfly condor, the core basics that most traders don't understand, and then how, why, when to use each of the variations of the butterfly and condor. So we'll go, and the course takes you through every example of when would you use a call or put butterfly, a wide wing butterfly, a broken wing butterfly, a ratio butterfly, broken wing ratio butterfly, iron butterfly, vacation, butterfly, Long Condor. It's kind of like that Forrest Gump, Bubba Gump shrimp. He likes it every which way. So you're going to have everything about butterflies. And then what are the best time frames for butterflies? When do you set them up? 1 day out, 10 days, 30 days? How do you get these structure setups where you get 10 to 1 or higher? That's covered in the course. How to profit from option volatility, collapse, theta decay, using the butterfly condor. The Batman butterfly, I'm not sure. It might. I don't think it's covered in the course. But come into the trading room because you're going to have a 30-day trial membership, or if you do the alert service, you have 13 months. So I'll show you in the trading room. And then in the butterfly course, though, you'll learn how to do this, what we call monthly option pinning. So this is worth the course right there. It's a lot of fun too. So this is where you can 12 times a year, take advantage of monthly option expiration, do what we call option pinning trades, where we're looking to set up targets to establish either butterfly or condor against that target. And then in the course, it tells you how to do that using unusual option activity and Fibonacci. So there's even that component to it. And then we go into the course into the Long Condor, the advantages of that versus the butterfly, how, why, and when to use the Long Condor spread, step-by-step checklist of when to do these spreads, put them on, take them off. And a big, huge part of this course is hedging. So we've had a pretty nice market so far, but someday it will end and you want to be able to hedge. So how to use the butterfly, Long Condor to hedge core positions, or butterfly condors that hedge and defend a vertical debit spread or credit spread. So if you've ever done credit spreads and you had to blow through your short strike, this will also teach you how you can defend it, to alleviate a lot of that agony. You'll get a resource library of exchange traded funds to use. Again, assignment risk, expiration risk, auto exercise, etc. Plus a trade library of over 58 pages of past trades of butterflies and condors. So these are my courses are very detailed and extensive. And so you're going to be very pleased, and especially when you're thinking about a price of $197, or if you do the alert service. So here it is again, Barbara. Here's for the masters, the package one, $197. Use this link. Here are a few nice testimonials to kind of show you. I've got hundreds of testimonials on my website and also just on all this stuff. So, it's been doing this a long time. So there's a lot that I can help and pass on to everybody here. So, most of the things that we remember are the mistakes that we've made, right? So especially in trading. So learned a lot. I've had a lot of mistakes. So hopefully I'll pass on some things I've learned so you won't make the same mistakes. So here's from Pam. She's one of my current members. Excellent class, Larry. As usual, you under promise, over deliver. Wish I'd known how to do this hedging before I lost so much money doing credit spreads. That's so common. Here's from Jim, says, thanks again for showing so many ways of getting out of trouble. Could have come in handy in the past. My trading P&L would have been totally different. And Jim was on the CBOE floor for years. He said he's learned more from me on options that he had ever known that could be exist, So Larry said, Larry, you missed the Apple prediction by 2 cents, but I guess that was close enough for the butterfly spread. Uncanny how your $160 goal was almost exactly on the money. Thanks to you, I got into the butterfly, made 390%. Not bad for 3 days of work. Thanks, Don. And this is from Salvasar, current member. He says, Larry, I took the last two. He's actually taken 3 or 4 or 5 courses now. But he said, I took the last 2 courses and I'm a trading club member too. You're the best teacher, not only in your courses you do, but also in your trading room. It's been a great learning experience, and you give such an in-depth option knowledge and great instruction to put it all into practice. So the other thing I was going to mention, you get a trial membership if you do package 1 for 30 days, and you can start it whenever you want. You don't have to start right away. So, if you're heading out on vacation, just send us an email when you want to start. And even for the alert service, you don't have to start that right away either. Here's your enrollment bonuses, and then we'll go through the alert service and take any questions that you have. The email with the links, yeah, you'll get everything by email as far as the links to the upcoming live course and all that. Yeah, all that's taken care of. So with this, you're going to get the bonus special, my option trading beginners course. I just completed this last weekend. So this is on-demand recorded course. All right, so it's a comprehensive, easy to understand trading course on options. So if you're just kind of starting out, perfect for your library. So the benefits of options versus stocks, Insider tips you'll want to know before you start even trading options. Must know options basics, puts versus calls, option expiration, option beginner strategy 1, cover calls, intermediate strategy 2, income and protection with a collar and resources. So it's a really nice little benefit course here for you. And then we'll do a follow-up live Q&A, which will also be recorded. You'll get a link to that when that's going to be. Option trading tutorial bonus 2. So this is just basically another option course, a 60-page option guide with videos. And this is most focused on, again, the Greeks, option pricing, standard deviation for price forecasting, option delta and trade probability. And then you'll get my top 15 option strategy guide. So, what is a back ratio spread? When would you use it? A long vertical ladder spread. What is that? A calendar spread, diagonals, iron butterflies, triangles, straddles, and then the option reference guide, Greek handout. So this will be something you can print out, put on your desktop on the Greeks, and a trial membership for 1 month. Again, you can start this when you want, and you'll get access to my virtual trading room each and every day. My daily video newsletter I send out after the market close, market perspective, what I'm seeing, what trade setups we're looking at. These are all archived, access to our weekly Q&As every Tuesday, live and recorded, educational vault, discount 70% on all courses, software on our website. So with the package 1, you get this for 30 days for trial membership. And if you'd like to then stay on, it's $97, or you can do an annual membership for $488. If you do the alert service, you get this for 13 months. Here's the Alert Plus package. Again, you'll get 5 to 20 stock. I mean, I should put 20 to 30 stocks. We do quite a few text out. So you'll get all 4 of my services: breakout reversal trades, butterflies and condors, calendars, selective earnings. And the earnings trades are usually, well, we've been doing a lot of what we call double calendars on the earnings trades, and they've been really good. So with the, every time there's a text or email, or you can have both, you'll get a trade guide for each trade setup video, everything's listed and archived, and then again, Trading Club for 13 months. So here's from Jay. He said, I'm loving my subscription to the Trade Club and the alert services. I paid for it in the first week. I guess now I'm a scholarship student. It's been a great way to start and finish the day with Larry. Put on the trades, not be glued to the screen all day, go do real life stuff, check in a time or two, be there for the close. So this is where that additional time I'm putting in lets somebody like Jay, and a lot of my clients are retired and they love to trade, but this allows them to do other stuff so they're not glued at the desk. Plus I'm picking out the trades for them. So I'm retired, the market's my main hobby, and this is exactly what I've been looking for. I'm learning like a sponge, Jay. So Jay is learning like a sponge, he's doing really good. And this was from Dan, who just signed up just recently. He said, the alerts work. Larry has done his homework. I paid for the alerts with my first 4 trades. Actually, I wasn't even trying to make money. I was trying just to learn how options work. The wins with the alerts gave me a great confidence to continue learning about options. So that we've had fantastic, good success. High winning percentages is what I look for. I don't want a lot of losing trades. And these are very all defined low risk trade setups that are sent out. So you get a suggested option trade. Okay, if you want, a lot of members may just do their own trade. They might just buy calls or puts. You'll get an entry price level, targets based on option activity and Fibonacci levels, what option series you should use, stop loss levels, guidelines, profit targets. Trades are listed and archived, trade setup video on the trade, and then the alert service. You get 13 months of my Trading Club. So you'll get my video newsletter, weekly Q&As every Tuesday, live and recorded, access to the virtual trading room, and then discounts on all courses and software on my website and educational vault. So it's a lot of great stuff. Here's an example of a breakout trade on, this was a debit spread on Twillo. Back in June, we did a Twillo. So this was, KG was one of the first ones to ever sign up for my alert service, and he's now been a member for 2 years. And here again, he signed up, he said, well worth the package traders. So when he bought it, it was $1,200. He paid for it on his first trade. So he said, great price, well worth it. So this was a text sent out on Twillo. You can see here in the 15th out the 17th. So here it says, Twillo long at 202, buy to open a vertical debit spread, 202, 205 at 95 cents, very low risk trade, and then send out the profit take. Now, if there's an adjustment, to do something on it, I send those out by text too. So this was a breakout trade right here, targeting up here. So we did this with a call debit spread, very low defined risk $1. All right, so this was a $2.50 wide spread, maximum risk $1. So spread was $1, potential profit or max profit was 150 because it closed above. So 150% return on that. No, I don't do refunds. You know, I do so much, give so much work and put out so much information here that you know, you either want it or you don't. I don't do refunds, but I don't really have anybody that ever wants one anyway, knock on wood. So, you know, I always try to do the very, very best, and typically everything's over delivered. So here's some examples. Here's butterfly condor trade alerts that have been sent out. A couple examples here. Here's the GLD butterfly. Now this was actually one that we did a calendar on, took profit on that and kept the trade through a calendar spread. So here it is, if long calendar call spread, take small profit here and could adjust to a call debit butterfly. So this was a trade that centered off a calendar, and then we created a butterfly, and this tells you exactly how to do it. So it says close the 10 July 170 short at $1, give or take, short the 24 July 175 for credit, and this adjustment make it a call debit. Anyway, I go through very detailed explanation in the text alert so you understand how it works. And then here it was, and said a profit take there on the 22nd. So that was that butterfly I showed you earlier. So this was pretty cool trade because we initially had this set up as a calendar, which you'll also learn about. So 89 cents a risk up to 299. Here's a calendar diagonal. This was on Dollar Tree. These are really fantastic trades. These are more medium, longer term, and you'll learn this, how to do these in the Options Masters course. So this was Dollar Tree long trade, close in the, says to define risk trade, long trade, buy to open the Dollar Tree 21 August, 24 July, 95.99 call at $3.05, give or take, debit. Okay, then I specify exactly what that is. So you'd be long of the 21 August 95 call, short the 24 July 99 call. So this is a strategy based on if Dollar Tree is going to move higher. We're directionally looking for it to go higher, but it could pull back in the medium term. So you can adjust the trade and hang with it. Max risk, debit paid, price target 196, price target 298, target, that should be 399. All right, so that was on the 14th, started taking it off on the 16th. And so here was breakout on Dollar Tree and did this what we call the calendar diagonal. So in at $3, debit cost, out at $465, $165 per spread. That's on one spread. So if you did 10, you know, $1,650, 55% return. So this is the combination of income plus directional, the way these are structured. Here's another one we did on Walmart for breakout to the upside. Did this with the calendar diagonal. So in at 410, out at 712, $302 per return, 74%. Here's one we did with a Microsoft, what we call a call calendar. All right, so this was a really cool trade. And this was doing a calendar for target up to 195. So right here, this was into at $85 debit, out at $1.76, $91 per spread profit, 107% return. So in the master's course, you'll learn these option strategies as well. And here are the earning trade setups. We've been doing a lot of these lately. We've been doing what we call double calendars, very low risk, kind of like selling a strangle. So this was a Microsoft double calendar. This was just done recently. And so this tells you specifically how to do it. If you've never done one, you can just follow these directions and you can learn how to do it just from my text alert directions. And so it's trading right here, did this double calendar, targeting 222.5 and targeting 197.5, close right in here, up $67 per spread on that risk of total risk here was the debit spreads together, so 93 plus 69. So the total spread cost was $1.62, went out at 229 per spread, 41% return one day later. These are actually very easy once you learn it. But again, the course is yours, and if you're interested in the strategy, then it's there for your taking. So again, here's a quick review here, Options Masters Quick Start Program. Here's for this package one for everybody here. And This is good for just everybody here at the Masters Expo, this Expo event tonight. So use that one there, and that's everything you get. And then if you like the alert package, you get everything in this package here, but also everything for my alert services and everything my trading club has to offer for 13 months. All right, so here's that link. And any specific questions or anything I can do, I'll show you if we have time if you want. Yeah, if you wanted this is a special just for everybody here. Okay, so if you do want it, I would recommend taking advantage of it. I'm not going to, I don't offer this out. This is just for this one special event tonight. Yeah, you want to look, here's a butterfly we did today. If you'd like to see it, we did a butterfly today on gold GLD. So we'll see how it pans out, but here's the trade setup if you'd like to look at it. Anybody here want to see the trade setup that we did today? Be happy to show it to you if you would like to. Okay, so here's here, I'll walk you through it now. Hopefully it'll work. We never know, but this was one that we did in our trading room today, right towards the end of the day. So we've been tracking gold here. So these are my trading indicators. I've got 7 different trading software packages that I've designed and developed. So they're all available on my website. And so as a member, you have access to all my trading indicators software at 60% off as well. So if you go to my website, I'll see if I can find, I'll just show you what I'm talking about here. So as a member, you'll be given a discount members code where you get these discounts. Okay, that's just another benefit. So if you come here, and then I'll show you the trade here. So if you go to Power Cycle Trade now, this course package that all these bonuses and stuff I'm giving you here tonight, this is special just for the Expo event here. PowerCycleTrading.com. So if you go here to courses, you'll see everything in here. All my trading courses, trading boot camp courses, and then trading software. Click on that, and you'll see all my software. So you'll get everything that you see here. You'll get a 60% discount off. So here's my volatility breakout scanner for TradeStation, eSignal, Thinkorswim, my custom directional trading indicators, Thinkorswim, TradeStation, eSignal, Ninja, my brand new indicator, multi-time frame squeeze breakout momentum indicator for Thinkorswim, TradeStation, brand new, my momentum flow indicator, my opening range breakout indicator, momentum signal flow trigger signals indicator, cycle reversal indicator. So you'll get anything here, you'll get all this or this bundle of everything, and you'll get everything 60% off. So just another benefit for everybody that's a member, and then all the other courses and things like that. So that's for you. And then here's the butterfly that we did today. So looking at GLD, it's holding this 50. If we can start moving through here, it has good potential up to about 190 based on option activity and that level there. So we set this up today, doing a low risk trade, taking a look at seeing if we can get a push towards 190. We don't even have to have 190 because we did a wide wing butterfly for next week's expiration, which is the monthly expiration. So we did this butterfly trades setup. So today it was going out at 183, and then we did a wide wing butterfly so we could still have a nice profit zone. So we don't have to have it go to 190. So we did this where we went long the 185 call, short the 190, 195. So $5 widespread butterfly for $77 per spread. All right, so first target would be 185 here, 186, let's say. So tomorrow the 14th, if we could just get a move from right here, if it moved 186, this will be up $26 per spread. Our cost is 77, so 30% return there. Now, if we come in Monday, and you'll learn how to do this in the course, use your analytics. If we come in Monday the 17th, and let's say it's trading at 187, let's trading right in this area, or let's say 186. This trade will be up $45 on the risk of 77. If we get into Tuesday and it's trading at 186, this trade will be at 56. If we get into Wednesday and it's trading at 186, we'll be up 79, so 100% return. If we get into Thursday and it's trading at 186, it'll be up 100%. If we get into Friday and it's trading at 186, this will be up about the same, but look what happens. If we do get a push towards 190, I mean, not a bad profit here if you can make 50 to 60 or 100%, but if we do get a home run and it does go to 190, this could be up over $400 on the risk of 77. So that's the beauty of it. You can hit singles and doubles. You know, you hit here, make $30, $40 per spread on your risk of 77. So 50, 60, 70%, maybe 100%. But if you do get that one where you nail it perfectly, you can make a huge return. But you can stay in the game because you're chipping away with low risk. Okay. So here's the from the alert services. Here's just the summary of the services so far. Back up a little bit. So the breakout alerts, we've had 76% winning rate. Butterflies, Condor, 74% winning rate. Calendar diagonals, 89% winning rate. The earnings trades, 85%. All right. Any other questions? I think that's got everything. If anybody else, we'll call it a night. But if anybody else would like to order or you're in the process, just put in a number 1. I'll wait until you get your order process and then I can confirm you're in if you want. So if you're still in the process of ordering or you want to order, just put in a number 1. And let me make sure you have the links again. Yeah, here, Bart, here's the link. Here's the alert service. I'll give you both. And again, you don't have to start either service right away. If you're going on vacation or whatever, just send us an email, support@PowerCycle Trading, and tell us when you'd like to start it. So here, if you want the alert service, use that link. One second. Yeah, that's good. Yeah, sure. That's yeah, trader. Yeah, that's fine if you're still working. Yeah, just use that link. Make sure you take that link with you. Yeah. Okay. So everybody, take your time. I got quite a few here that put in number 1. So that's for the alert service, and here's for the if you want this package 1. Now, if you do the alert service, again, you get everything here plus the 4 alert services, the trading club for 13 months. And so here's package 1 right here. Right there. Sorry. Yeah, Alan, that's fine. Just if you'd like to do that, just keep the link. Hey, Andrew, we do have a number on our website, but you know, we don't have a huge, I've got one girl that pretty much does my customer service. She is great. So just actually it's easier if you just email her and I'll give you that email. There you go. So if you have a question, it's easier really to do that. You'll get a better, quicker response. Okay, so that's pretty much it. And I'd just like to say thank you so much for everybody being here tonight. It was a lot of fun. I enjoyed it. And I look forward to seeing a lot of you at the course and in the trading room. So Again, I appreciate everybody being here. And if you're still in the process of ordering, take your time. Just let me know, put a number 1 or something, and I'll just hang here with you. Yeah, so our trading indicators we have for Thinkorswim, TradeStation, Ninja, and eSignal. The GLD trade today, why that wasn't sent out, we did that right into the close. So I just can't type fast enough. We were going through the last 30 minutes today, we were looking around. I was looking at different trade setups, and then the gold popped up. So we looked at that, and just kind of one of those things that just came about real quick. Earlier this week, we did a alert trade on Bristol Myers, American Express, and both of them hit targets the very next day. You'll get the receipt and login information tomorrow, or later today. You'll get everything, so don't worry. But it's all pretty much automated, but you'll get everything. Okay, well, again, thanks everybody for being here. And if anybody else is still in the order process or whatever of getting in, just put in the number 1 and I'll make sure I wait. Yeah, you sure can, Andrew. Just keep the link, and yeah, you can do that a little bit later if you'd like. All right. Again, hopefully I got all your questions answered. Okay, question, how can you understand options to trade spot Forex? Well, with pairs trades, you can, with spot Forex, the option trading is kind of limited unless you have an over-the-counter market maker. But what you can do with Forex, so let's say if you're trading dollar euro or dollar yen, the easiest way to trade Forex, if you like to trade what do you like to trade, dollar euro or euro yen or dollar yen, just use the ETF. So if you want to trade the dollar, so what happens if the dollar goes up, euro goes down? What happens if dollar goes down, euro goes up? So one easy way to do it, if you want to use options, maybe diversified, use the FXE ETF. Good options on that if you want to do that, or UUP for the dollar. So package 1, you're going to have a lot of option material. You'll have everything really you need for your option trading library. So everything will be on demand. You'll have all the videos on the cloud in modules, so you can access those anytime. Then you'll get my PowerPoints are very detailed, and you'll get that. You can have that on the cloud or print it out. So Carol, just use that link. What are you using the correct link? If it's not going through, you could just type it in, just copy it and paste it if you'd like. It should, excuse me, it's usually pilot error. You know, we fat fingers or we have one thing off. So just put in whatever URL, pull up a URL, and just put in powercycletrading.com / Master Expo. I forgot what the link was. Hold on. Master Expo. Just type that in. And then click enter. It should pull it right up for you. Okay, we'll yeah, go ahead, Carol. That's fine. Just Yes, just keep the link with you. That's fine. I know how it goes. So the proprietary indicators, my indicators, it's a one-time cost, and then they're yours forever. There's no licensing fee or anything else. So once you buy the indicators, then they're yours. Sounds good, Carol. What is the cost? The cost of my indicators, you can see all the cost on the website. And then if you're a member, you get 60% off of that cost. So if we look at here, I'll just pull it up real quick. Now I'm going to be going up on my prices. I know that's cliche, but I am going to go up on all my indicator software prices because it's they're way too cheap. But so if you want my volatility scanner, it's very reasonable, $397, but you get 60% off of that. Now here's my core trading model. This is a 5 study set model. It's currently $397, and you get a 6% discount off of that. So within the next week to 2 weeks, I'm going to be going up either to $497 or I'm not sure yet what price, maybe $597, but just to let you know. So as a member, you get discounts on everything. Here's my newest indicator, multi-time frame squeeze alert indicator. So this shows you here's the indicator on one chart, everything that's in what we call a volatility squeeze plus the momentum of that time frame. If I can find the chart again, I'll show you. This is my brand new indicator, and this will be going up to 397. So this will show you what we call a volatility squeeze, which you'll learn about. So everything on this row is what's in a squeeze every time frame, and the row above it is we track our direction by momentum. Is a momentum, if it's green, it's positive, red is negative. So just trying to pick something out here. Trying to make a good selection here for something you can see. Here's one we're kind of tracking right now. It's a stock called Now. So you can see this is our extreme range band. You see these dots, that's indication based on our program that's in what we call volatility squeeze. And then we can tell if any time frame's in a squeeze, it's color coded. So here, a 2 minute, if it's red, it's in a squeeze. So if I put this to 2 minutes, see the dots? So it's in a 2 minute squeeze. 5 minute squeeze just triggered, it's in purple. So if I put this on 5 minute, you'll see that it just triggered, which means it broke out of that squeeze. So see the bars there. So it's in a 20 minute squeeze, 2 hour, 4 hour daily, 2 days. So if I put it up here to a 4 hour time frame, volatility squeeze there, daily 2 day squeeze, I'll put it to 2 days. It's just starting 2 days. This has really big potential starting to build. And then the upper row shows you is the momentum positive or negative. So here's a 2 day squeeze. Okay, so 2 day says negative momentum, it's red. See the momentum, it's based on our momentum indicator here, cycle 1. So it's a really great indicator. So that's currently $297, you get 60% off that. Do I trade politics? No, I don't trade politics. How can you do that? Absolutely. Can you use the indicators for Forex? Yeah. So what do you want to do? Dollar, euro, dollar? And they're great for Forex. Forex. So let's see, what do you want to look at? Euro dollar? Oh, come on. Yeah, okay, we can look at that. Pound New Zealand, sure. Here's euro dollar cross. Look at that. See this, a volatility squeeze breakout? See that? Momentum cycle 1 and 2 are positive. Look at that nice move. Okay, so let's take a look at pound New Zealand. Trans World, when I was running the group, we traded hundreds of millions of dollars every day in foreign exchange. Hold on. Let me find that one again. Symbol's not correct that I'm using. 1 second here. Damn it. Come on. There we are. Know what's going on here. Oh, okay, thanks. /. There we go. That's, yeah, futures. Okay, sorry. My brain is going a little bit dead on me here. Jesus. Now I can't get up. Yeah, sorry about that. Oh, here we go. Oh, I don't know why it wasn't coming up. I was just going to go to FX and try to find it there. So one more try here. Here we are. Oh, I didn't put the slash between it. This had a really great, see the breakout here? And it's the volatility squeeze. See how the prices consolidate really tight? Now see these lower study 1 and 2. This measures momentum. That's how we base direction. So this was a beautiful breakout trade to the upside. Long pound, short the New Zealand. So here it comes in. Tight squeeze. Momentum's up. Now we use multiple time frames. This is a moving average cross that I like, 513. You want to take the trade on a break of those prior highs right here. 513 cross, moving average cross. Take your shot right there. And we always use multiple time frames. So one of my favorite combinations is the 4-hour daily. So here's a 4-hour squeeze. Anyway, pretty good trade there. And let's go back and look at a few others. Call it quits. All right, that's gonna be it for the night. Yeah, well, these are my indicators. These are, you get used to them, I guess. Or if you have these different indicators, you don't have to have them all on. But all right, well, that's it. Again, appreciate everybody. And if you have any questions after later on, support at Power Cycle Trading. There you go. I believe it is, Michael. Thank you very much, Z. So the next thing I always like to look, I use Fibonacci for targets. So if we were looking at just this, some major moving average resistance here. So I'd wait, let it try to get through here, hold over, then it has a lot more potential upside. Yeah, thank you very much. So you like this pair? Nice. All right, everybody. Thanks again. Ciao.